You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amberdata. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amberdata delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amberdata eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody, that music means we are back. It is Monday. It is time to dive into the dark, turbulent, and stormy waters of all things crypto. Yes, it is time once again for the Crypto Rundown. My name, of course, Mark Longo, coming at you from the network upon which all of you should be subscribed by now. If you just listen to the Crypto Rundown, we love you, we appreciate you, but you are missing out on a heck of a lot of other great stuff. TheOptionsInsider.com/pro is where you can also go to get access to a lot of fun, exclusive analysis data, awesome pro Q&As. Just had our buddy, Mr. Tony Saliba, joining us in the pro Q&A last week, tackling all your questions. An awesome opportunity for our pro members. If you don't know who that is, another reason why you should be subscribed to the pro listeners. A lot of great stuff rotating through that hot seat, including a lot of great folks rotating through our crypto hot seat, including today where we are joined once again. It's wild markets, so you knew he couldn't stay away. Our good buddy, Mr. Greg Magadini from Amberdata. Mr. Greg, welcome back to the Crypto Rundown on yet another wild Monday, sir.
Wild Monday indeed. Thank you for having me on. Happy to be on as always.
All right, a lot to unpack. Let's get down to business. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, let's get down to business with the Bitcoin Breakdown. Things are, shall we say, a little bit wild out there. People always get a little panicked in the crypto market whenever we break through important psychological levels in the crypto market in the wrong direction. I don't think they get much more important than that 100K threshold. It's very much a barometer for the mental health of the crypto market as a whole. When Bitcoin is north of 100K, the hodlers are happy, the institutions are happy, everyone seems to be happy on the crypto front. When we start breaking through 100K in the wrong direction, or last week we broke through it and rallied back, whenever we're flirting around this 100K level in the wrong direction, people seem to get a little bit, shall we say, spooked out there. And that's kind of where we're hanging out right now, listeners. A little bit more blood red on the screen this week. On the end of our show last week, Bitcoin was back north of the psychologically safe level of 100K. It was 105, almost 105 and a half, 105, 428 at the end of our show last week. Coming in to start the show today, 92, 162. So taking quite the drubbing off 13,266 handles. I'm sure if I re-rack it right now, might even be more. So a lot going on out there. Before we get to all the vol and the other fun stuff out there, Greg, let's just start with that. What is catching your eye and what is top of mind for you in all things Bitcoin as once again we fall back below 100K, sir?
Yeah, so Bitcoin, kind of my base context and theme is Bitcoin is part digital gold and part risk asset. Today and kind of over the past month, we've really been shifting to risk asset type of movement. And I really think what's going on here is we're having sort of some nervousness around sort of the AI bubble, you could say, and how that's going to be financed by a lot of credit in the future for CapEx expenditure. And so what happens if the credit market balks at that and AI exposures, something like 40% of the S&P 500? So that's bringing down risk assets. And what I think is happening is that we're seeing sort of the similar type of fears in crypto. So we've had a lot of digital asset treasuries own crypto either through equity sales or through debt sales. And so what does it look like if prices come down and credit markets sort of lock up, so to speak, and you can't refinance those positions? Do they become net sellers instead of net buyers? And what does that look like for crypto prices? So I think that's the theme that the market is starting to price in today. But overall, it's just going to be kind of interesting to see how the battle of a rate cutting cycle is on pause. The FOMC 25 basis point cut for December was 100% probability 30 days ago, and now it's a 50-50 coin toss. And so a lot of those themes are coming in all into play at once. And I think the big catalyst this week is going to be the NVIDIA earnings, because that will give us some good guidance around sort of the AI context. And if that calms down, I imagine that crypto could find a little bit of a footing here and bounce back up. If NVIDIA earnings spook the markets even more, I imagine crypto follows suit and drops even more. So that's kind of how I'm looking at it. I think Wednesday after market close is going to be the big move, and I treat the NVIDIA earnings as a Bitcoin vol event. So I would treat the optionality of Bitcoin for that Wednesday expiration very tied to the NVIDIA earnings. So that's something to look at.
Yeah, a lot of crossover, a lot of overlap in that Venn diagram between crypto and all things NVIDIA. People, it seems like an eternity ago now, Greg, but the second big leg up in NVIDIA stock was driven off of Bitcoin mining. It seems like that has faded now with the third much larger leg up, which has been driven by all things AI. But NVIDIA's lived multiple lives over the past decade and change, and there was a good sway of that for a while. You remember you couldn't buy a graphics card because all the Bitcoin miners were gobbling them up at above street price. So that was their first leg up. But you mentioned NVIDIA earnings and the stock market and what we're looking ahead to there. Your buddy the Meatball has been on the network a few times lately. He's been beating this drum of Bitcoin is a leading indicator for the stock market. Whither Bitcoin goes, so goes the S&P 500. And ever since it dropped below 100K, he's been kind of leaning on, I don't know, maybe this is the first canary in the coal mine that the sell-off is coming. Where do you fall on that Bitcoin as the leading indicator theory, sir?
Yeah, that's an interesting theory. Mark and I hadn't chatted about that, but he did reach out a few weeks ago about, hey, is there a selling spiral, death spiral potential here in crypto? What are the average prices for all these digital asset treasuries? And I think that's a really interesting question. So if we look at MicroStrategy, that's sort of the biggest owner of digital asset treasury for Bitcoin, average price about $74,000. And we know that Strategy has used both debt and equity to finance those purchases. And then once you kind of get out into the altcoins, BMNR, ETHZilla, and you look at their ETH holdings, while their average purchase prices are $3,600 for Bitminer and $3,900 for ETHZilla, I think most of that is financed through equity, so there isn't that leverage component in the same way. but definitely underwater on those positions. So the death spiral scenario is something to keep in mind. I'm not sure that this is the end of the bull run, and long term this might just be one of those downward moves that creates great opportunity. But it's really important to know that that potential is out there, and look at that in terms of how you're trading it.
That's what we've been watching for a while, right? Can the perpetual motion machine, that is the Bitcoin / insert crypto of choice here, treasury strategy, can that keep pumping out money forever? Or does eventually the tax man come for everybody at the end of the day? Speaking of leading correlations, Mr. Greg, our chat has hit upon perhaps the greatest correlation of all. They said, have you seen the McRib and Bitcoin correlation chart? I'm not sure if you know, McRib is back. Every time the McRib comes out, Bitcoin pops off. So, I wasn't aware of that correlation, Greg, but now that I hear that, I feel a lot better personally. Now I know the McRib is back. Bitcoin is safe again. What do you say, sir?
I have seen that correlation.
You have seen this? You've seen the McRib correlation? That's when you know you're maybe too deep in the weeds, Greg. You need to dial back a little bit.
That is the ultimate meme. Problem with correlation is you could run the correlation against a lot of stuff, and a few things will be correlated, but the causation is not necessarily there. But, trading the McRib correlation is it's a funny one, that's for sure.
How dare you say there is no causation? I'm tempted to hang up on you right now, sir. How dare you besmirch the McRib Bitcoin indicator, listeners? I mean, if ever there was a relationship that holds true, it is the Bitcoin to McRib indicator. Makes me want a McRib now at the very least. So I guess it's working on that side. I'm not sure about the Bitcoin side, but we'll find out. On the Bitcoin front, let's go crunch some of the data, shall we, listeners? Remember, if you want to crunch this data for yourselves, Amberdata.io or pro.amberdata.io, they'll get you to the GUI where a lot of this data is all there for free for you now. So we really just scratched the surface of it. There's only about a 1 hour show, listen. You don't have time to get into all of the wild stuff out there. But if you go down and look at the vol right now, we've been saying for a while, Bitcoin vol was looking a little bit light. So maybe be careful if you're hitting the bid out there, starting to come back to life a little bit. Also a sign that when you break through these seminal levels in Bitcoin, listeners, and the vol increases, guess what that means? That means the puts are bid. And the puts are not usually bid. That's something else we've been pointing out on this show for a while. It seems like a lot of the concern, a lot of the bias, skew and vol-wise has been to the downside, and that is reflected. Whenever you're selling off and vol is increasing, guess what? Your puts are bid, and that is the case. The Bitcoin 7-day vol right now at about a 52. That's up a little over 10 points from where it was last week at a 41.5. So things getting, I won't say spicy, because we've seen Bitcoin vol much higher than that, obviously, but compared to where it's been languishing for a while, getting a little bit more respectable. 30-day vol going from a 42 to nearly a 49, about a 48.5, right as we kicked off the show. So ticking up about 6.5 points. And then going out to where the hodlers hang out, listeners, the 180-day vol, that was at a little bit north of a 46 on our last show, 46.2 to be precise. Kicking off the show today, 49. So again, we've seen Bitcoin vol much higher, but starting to come back to life. Since I mentioned the skew, let's get there as well, because it's going to reinforce everything that I just said, listeners. On the weekly skew front, we were at negative 2 3/4 on the show last week. Remember, that weekly skew number is going to whip around all over the place, even intraday, depending on where Bitcoin's hanging out. And we had regained the 100K level on the show last week. So, of course, it was still going to be biased to the downside, but it was going to come off the lows. It was about negative 2 3/4 last week. All that is gone now, negative 7 3/4. So taking another full 5 points to the downside since our last show. So again, the near-dated concern, interest, call it what you will, in Bitcoin, clearly to the downside for obvious reasons. The 30-day skew, listeners, that was looking pretty bearish on our show last week. Negative 3, not a ton, but for monthly skew, that's pretty bearish. Negative 5.2 right now. So again, ticking down, ticking closer to the dark side, listeners, and hanging out where the hodlers like to play. It was negative 1.5, so it was already biased to the puts last week. Negative 2.1 this week. So, Greg, this is something we've been saying for a while on the show. Bitcoin vol is low, and the skew, what premium there was for the hodlers, has kind of evaporated, and now the premium is clearly to the puts, including if you go out 6 months and beyond. So, kind of wild times out here in Bitcoin, sir. What is catching your eye from a vol and skew perspective?
Yeah, so I mean, the weekly skew being so negative, I think, is setting us up for an interesting potential relief rally in this NVIDIA earnings release. So I think that could be interesting. I'll probably wait until the last minute to put that thing on just because things could probably get a little bit worse. I also think if you look at the term structure in terms of backwardation where we are today, it's historically very backward. So that sets us up nicely for that type of play. There's a couple ways to do that. You could just do like the delta neutral risk reversal play. So, sell the put, buy the call, short, do the 25 deltas on the legs, and then short half of a Bitcoin on the perp or the future in order to get that delta neutral. That could be interesting. Also, 1x2 structure could be very interesting. Buy the one call close, sell two kind of out of the monies. And with the idea that we probably, if we get some sort of relief rally, kind of target back towards testing that 100, and vol kind of comes down post NVIDIA. And if there's a bad earnings print in NVIDIA, your downside is pretty much no risk there because you own the call spreads in the 1x2 form. So you could afford a downside kind of come in. So that's an interesting trade there. But what I'm really expecting is some sort of normalization in the contango, of backwardation back into contango. And then the short dated 25 delta risk reversal is pretty extreme here. So I really think sort of a normalization trade is pretty interesting. And we have that clear catalyst with the NVIDIA earnings. So that's kind of how I'm leaning. That's how I would trade this environment this week. Obviously, FOMC December cut. There's a lot of reasons for us to not get a cut, especially with the lack of economic data and the Fed being so data dependent over the past couple of years. It wouldn't surprise me to see a hold for December 10th, especially after Powell already signaled that December rate cut was not a foregone conclusion. So he kind of gave the market a heads up there. So that could be another reason for risk assets to come down. I think the market was very, very bullishly priced on the back of tariff trade negotiations working out, easing cycle coming in, QT ending, and now it's the government shutdown ending, and now sort of all the positive catalysts are behind us. So the medium-term picture is a little bit more choppy. The short-term picture could rally thanks to NVIDIA, and then the long-term picture, I think, is still bullish.
Let's get out to a product that a lot of you have been slinging, a lot of you have been bullish in for a while. Maybe that worm is starting to turn. We shall see. Of course, talking about IBIT, kind of the 800-pound gorilla in the crypto options landscape right now. Again, kind of wild to see how this product has just taken over the game right now. 51.85, so continuing to sell off. It was north of 52 when we started the show today. So that puts it down about 8.5 points from where it was this time last week. Absolutely wild sell-off out there these days and continuing to spiral downward. The ADV, 917,000 contracts a day. That's impressive volume. Again, that's about VIX volume right now. That's down about 20,000 from last week, but already blowing past that today. Over a million, 1.01 million contracts on the tape in IBIT right now. So again, kind of wild stuff. If you're wondering what's the vol in IBIT, 30-day vol, 52 up 7 points. That's pretty close to what we're seeing on Deribit, about a couple of points difference out there at the end of the day. That'll probably be arbed away pretty quickly. If you're wondering what is the hot trade out there in IBIT today, it's 32,000 of the Nov 71s expiring at the end of the month. We're going up for about 3 cents. Looks like that's probably closing, so I'm guessing someone is getting the heck out of Dodge on those, even though it's all to the offer. So maybe someone was short them and they're buying them back, in which case a ballyhoo for you. But a couple of interesting spreads went up today, Greg, that kind of caught my eye. Curious your thoughts on these. First off, I noticed what looks like a bit of a Jan collar going up. It's the Jan 4571 collar. Looks like paper buying the puts. Looks like they paid close to 80 cents for that, about 78 cents. Obviously, the put's going to be over in that scenario, and IBIT's a little bit shy of 52. But they managed to sell the 71s for 63 cents. I don't think anyone right now would be too mad at letting their Bitcoin go at, or IBIT, I should say, go at 71. Almost 20 handles north of where it is right now. So kind of an interesting level. Then also looks like today we have some action on this Jan-March 53 calendar out there. It looks like paper maybe buying the Jan and selling the March. So kind of doing a little bit backwards, which is kind of funky as well. Looks like they did that for, looks like about a buck 70 or so out there with the March being over. So kind of wild stuff, Mr. Greg. A 53 put calendar, Jan March, a Jan 4571 collar, and then a whole bunch of other stuff. What is catching your eye in IBIT these days, sir?
Yeah, it's interesting. The Jan collar, that seems to me like traditional financial advisor flows, or like long-term holdings. Buy the asset, buy the put, sell the covered call, kind of limit your risk, but get some of the exposure to the asset class. That seems like like a low risk trade, just to get the exposure, the diversification to a portfolio. I think for me, these types of moves where you get like a sharp downward move, if you wanted to play the bounce, I think what's really interesting is shorting some of that short-term, medium-term put paper, and then buying long-dated out of the money call spreads. And so the idea there is, if you're short a lot of gamma, if you get that bounce, and that short put, because it's short dated, should quickly kind of collapse in value. And then you owned a call spread long term for sort of that long term trend, but you want to spread that because there's just a lot of vega there, and we're kind of in a high vol environment on the sell off. So you want to trade away some of that vega, but allowing you to essentially leg into a long dated call spread in a way that's pretty cheap, and then you could get that exposure to the long term trend resuming. So I think that's how I would play this type of move. I think doing it on a cash secured basis is the way to do it. That's the most interesting in my mind, because that way, worst case scenario, you take the asset at a price that you're interested in. That's kind of how I'm playing some of these other equities like Circle and things like that. But yeah, these types of moves are, if you didn't get hosed on the way down, are interesting opportunities for the long-term believer.
Speaking of the ways down, we haven't talked BITO in a long time on the show. I happened to just pull it up. It hit a new 52-week low today, Greg, of right around 14 and a quarter. So BITO, wearing it right now out there, which is kind of fascinating. Maybe some of that speaking again to the lack of liquidity out there, but an intriguing one nonetheless. You mentioned Circle, all that fun. We'll get to all that in a second. Let's hit really quickly on Mara here while we're still hanging out in the Bitcoin breakdown. 11 and a quarter, Mara taking on the chin off 4.5 points. So hopefully you've been doing well on the wheel trade for a while out there, in which case you've got some cushion to weather a little bit of this downside storm. 281,000 contracts on the tape right now. The ADV is 340, down 64,000 contract, which is kind of wild. If you're wondering what is the hot option out there in Mara today, it is 14,000 of the 16 calls expiring this week. Those are interesting. I guess you're hoping for a roll of the bones back to the upside. If you're wondering, 16 calls expiring this week, you can get them all you want for about a penny. So if you want to take that flyer, listener, you think Mara's going to come roaring back to life, then there you go. If you want something a little bit closer to home, how about 14,000 of the 14 halves? So maybe we've got a little bit of vertical action. Those are about 4 cents. So a little bit richer on the 14 halves. But there we go. Greg, I know you're not a huge Mara guy, but are you still down in MSTU or anything else catching your eye in the Bitcoin breakdown? You want to keep rolling to the altcoin universe, sir?
Yeah, the MSTU play, I think, worked out really nicely. Really has. So just for anyone new to this thesis, MSTU, basically it's a 2x MSTR. There's a tracking error, so to speak, with those 2x ETFs because the denominator for the rally is always smaller than the denominator for the sell-off. And so over time, those 2x ETFs kind of grind away. And the higher vol the asset, the more that grind away happens quickly. So obviously, strategy has come down a lot. MSTU has 2x that performance to the downside. So it's very hard for it to kind of recover to that $30 level, so to speak. So selling those out of the money calls are typically a great way to finance some upside somewhere else and kind of have a hedged position that way. It's a dirty hedge, but it kind of works. And so MSTU now is $1.47. It was $30 back in February. Probably never going back to $30 is the long story short there. And it probably grinds to 25 cents. So we'll see what happens.
Do they have a history of reverse splitting this like a UVIX or some of the other levered ETPs? Or are they just going to let it grind to zero?
So the only split that we've had is a regular split. We haven't had a reverse split yet.
Oh.
So MSTU used to be $300, so they split it down 10 shares to one. I'm sure they'll reverse split it just because who's going to be trading a $1.50 stock? So I'm sure they'll reverse split at some point. Keep in mind if you're trading that out of the money call strategy, the second you get that reverse split, those options get very illiquid.
Yeah.
So you got to be willing to hold them. Otherwise, you're going to get hosed getting out. So just something to keep in mind.
I did a fun experiment on the network just for our listeners, holding an options position through I believe it was a UVIX reverse split at the time, and it was not fun to get out of that and trying to get a broker to understand how to even get out of those. So yeah, listeners, if you do have some of these vestigial options positions, and they do, and there's no sign of it right now, but if they do go for a reverse split, probably want to close them while the getting is good out there. But speaking of getting while the getting is good, let's get on into a little bit of the old altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the world of all things altcoin. Now, let's break it down with a little bit of top 10 action. Spoiler alert, cost you less to break into the top 10 this week than it did last week. The question is how much, and looks like it's a little over 4 billion, about 4.2 billion coming off the top out here. So a big bloodletting out here in the crypto market over the past week. It cost you almost 21 billion to break into the top 10 last week, about 20.9 billion to be precise. That is down to 16.7 billion this week. So again, quite a big bloodletting. Now that said, it wasn't that long ago where it cost you less than 10 billion to break into the top 10. So we are still north of that if you want your glass half full indicator. That still gets you to our old pal Cardano. In fact, it looks like a lot of the arrangement of our top 10 hasn't really budged. It's just everyone's come down. The lowering tide sucks down all boats, if you will, listeners. Number 10 is Cardano, 16.7 billion worth of market cap for the number 10 spot. Number 9 is Doge, 23.3 billion. Number 8, it's Tron, 27.7 billion. The much anticipated pop for Tron Ares never materialized, listeners, because I guess the movie didn't do too well. Number 7, it's Solana, 72.1 billion. Number 6, USD Coin, 75 billion. Number 5, it's BNB, 124.6 billion. Number 4, good old XRP, still north of the 2 handle of just barely as of the time of this chart, 128.8 billion. Number 3, it's Tether, 183.8 billion. Number 2, it's ETH, 363.9 billion. And the big dog looking a lot smaller this week, it's Bitcoin, 1.8 trillion with a T out there, listeners. So some wild stuff. Let's get out to the one I know a lot of you folks have been fixated on these days. This is ETH. ETH's kind of came back with a vengeance this year, and now it's giving it back with a vengeance right now. Was a little bit north of 3,500 on our last show, 3,531. 3,000 almost exactly right now, 3,009 at least as we kicked off the show. I'm sure if I re-rack that right now, yeah, it just broke through at 29.88. So we are back below the 3K level now in ETH. So again, another important psychological level. Probably going to impact the vol and the skew a little bit out there right now. Before we get to all that vol and skew front, ETH, Greg, I know has been a core holding, one you watch quite a bit as well. What is going through your mind, and what are your thoughts as ETH giving back a lot of its gains for the year, sir?
Yeah, I think ETH is going to have a hard time ahead of it. I think these digital asset treasuries the ones that got late in the game didn't want to buy Bitcoin because they sort of wanted to outperform Bitcoin. So they kind of bought ETH near the top. ETH testing 5K as Bitcoin made new all-time highs and just unable to break that, not a good sign. And then you have all these DATs that are underwater, not a good sign. And then you have the fact that, unlike Bitcoin, ETH doesn't have the digital gold play. Now, ETH does have the stablecoin infrastructure play, which I think is nice, but it doesn't have that digital gold bid, at least not right now. And gold is sort of the one thing that's been doing so well this year. And so ETH trades a lot more like a tech stock. And if the market is shaky right now because of the tech sector, I think ETH is going to have a hard time. Until that turns around, I would say Bitcoin is the quality asset. ETH is a little sketchy. Solana, I'm a little bit torn on because it has the same sort of sketchiness as ETH in that sense, but the market cap is so small that if Solana were to take market share away from ETH, it actually might perform pretty well. So the Web3 ecosystem has sort of, call it a fixed market cap. And right now, ETH is the leader of that Web3 ecosystem, and it has market share to lose. Whereas another competitor could steal that market share and sort of perform well despite the overall market going down. So that's something I keep in the back of my mind for Solana. But yes, unlike Bitcoin, ETH having digital asset treasuries, the biggest ones being all underwater on their holdings, that's going to create some sort of supply overhead.
We're heading into some sketchy neighborhoods, says Greg. So lock your doors, listeners, as we head on into ETH land. Vol in ETH land getting a little bit spicier, as you would expect. Was at a 771 on the 7-day vol last week, listeners. 83 and a third right now. So again, ticking back up, starting to threaten that triple-digit level we've come to know and love out there. 30-day vol, 70 and a half on the show last week, 75 and 3/4 this week. So ticking up over 5 points and out to where the hodlers hang out. 180-day vol, 70 and a quarter on our last show, 72 and a half right now. I'm sure if I re-rack these right now as we've kind of blown through 3,000 a little bit again, that might even be higher. Same thing with the skew, listeners. It was a -5 on our show last week on the weekly skew, -8.3 right now. Again, probably is a little bit lower now as we've again broken through 3,000. 30-day skew, -3.5 on the show last week, -4.7. So closing in on a -5 to the downside and going out to where the hodlers hang out. We've been saying for a while, the one place where you still get a little bit of juice for your upside calls if you want to sell them is in ETH. It was +1.5 on the show last week. That is starting to go away. It's not quite a full point shaved off the top, but it's pretty darn close. It was at about a 0.65 as we kicked off the show, which is pretty much all but flat. Mr. Greg, the skew and the vol not exactly painting an optimistic picture here. So what are your thoughts on ETH, skew, and vol right now, sir?
Yeah, so ETH obviously is a higher vol asset. So back to that digital asset treasury sort of component, being underwater in a higher volatility asset, not great. So I think it's kind of justified here. But yes, pretty interesting to see ETH near 100 vol, especially for the short dated stuff. That 75 vol level on the back end of the curve. We've kind of been stuck around 75 vol for ETH for a long time. I think that's probably fair, justified. Right now, I think the skew being negative to the put side is very logical. I think the downside volatility risk is to the put side. I think if we were to rally, there's going to be a pause again at this like $4,800, $5,000 level that it's got to work through. If we've tested it a few times, unable to get through it. So if you're shorting sort of that upside, that would be the line in the sand to hedge or cover if we got past that 5,000 before your options kind of expire off the book. So that's kind of how I'm looking at it. I do think ETH will be interesting again, but I want to see how it plays out here. I think there's lower prices, and I'll be interested again at these lower prices, or if we get past that $5,000 level and we're getting that new environment where the supply has been absorbed.
Now, speaking of new environments, we are kind of in a new environment now that we have some of these ETFs coming online that make them ETH more accessible to a wider audience, also including those staking rewards. So a little bit different environment. We have Solana in that game now too, so a little bit different environment out there than the last time we chatted about all things ETH. Speaking of the rest of the altcoin universe and some other names that are ETH related and beyond, let's go out to Greg's favorite holding. I think this is beyond MSTU. This is the other 1% MSTU, 99% is in this name. This is Bitminer, aka Bminer. I like the name. I like the handle, BMNR. 30 3/4, off another 10, about 10 and a half bucks since our last show. An absolute drubbing out here, listeners. The ADV, 233,000 contracts, up 13,000 from this time last week, putting up nearly 300K today. The ADV, or I should say the vol out here is 120%, so go figure it's higher. And the hot option out here is 11, almost 12,000 of the 27 puts expiring this week. Average price for those, if you want to take a flyer on more downside, is about 64 cents, listeners. But let's get out to Greg's real core holding, the one he's been super excited about. I think he's called it on this show in the past, the Netflix of the stablecoin era. This is Circle. The good news is, if you're down with a little bit of Circle, it's on quite a discount right now. It was well north of 100 on our last show, coming back to earth right now, down nearly 30 handles, 28 handles from the last time we were talking about this, at about a 75 even when we kicked off the show, which has been absolutely wild. At this rate, it's still above its IPO, but only a little over 2x that. Remember, it went public right around $30. It was very infamous IPO, leaving obviously a lot of money on the table. Right now, a lot of that money coming back, putting up about 186,000 contracts today. That ADV continuing to tick up to about 141,000 contracts a day. It's up about 22,000 contracts from this time last week. Interestingly enough, the vol coming down a little bit, down to about an 87 on the 30-day vol front, down about 17 points out there, which is kind of interesting. And the hot option out there is the at-the-money put, the 75 put, trading about 14,000 times today for about $2. So if you think Circle's got more downside, maybe you think that $2 is cheap. If you like a little bit of the old harvesting of the risk premium, then maybe you think $2 looks good in your pocket. Mr. Greg, you've been bullish on Circle for a while. It's kind of been an interesting run for the bulls out here in Circle of late. Have you still been dialing up the cash secured puts out here? What are you up to in Circle?
Yeah. I want to see how Circle plays out in the long term. I definitely think, to me, Circle is such a sort of game changer narrative that I think there's going to be a heyday for Circle in the future. But yes, the short term doesn't look great. In terms of what I'm doing, I think the Jan 2028 sell the $45 put, buy the 100 to 230 call spread. So I'm basically risking 45 points to essentially make 130 points. That spread costs me about $3. So to me, that's like a built-in, 2.5 to 1 risk reward. Worst case, I own Circle at 45. I don't know. That's so interesting. I can't let that pass up. Like, it's also a cash-rich business. I don't see it going bankrupt. It's got cash on its balance sheet. It's got a lot of free cash flow. It's not one of these like invested in property, plant, and equipment, and like they're bleeding cash all the time. It's not like one of those situations. I think we eventually get back to those $300 prices. In terms of market cap, Circles call it 19 billion. Dogecoin is called 24 billion. I mean, what's more of a game changer and has a more of a future, Circle or Dogecoin? In my mind, it's clearly Circle. The idea of digital dollars on the blockchain and internet dollars. Internet dollars are going to be, in my mind, how a lot of transactions are done in commerce and things like that in the future. But we'll see. I mean, that's just a thesis. Who knows? I'm just guessing. We're all just guessing, but that's kind of how I see it.
Wild stuff out here in Circle. It's always wild stuff in ETHZilla, listeners. I forgot to mention Greg's other size holding out here. This one, after reverse splitting, surprise, surprise, coming back to earth in a hurry. Trading 12 1/3 right as we kicked off the show, down about 5 2/3 handles from last week. So they are coming for ETHZilla this week, putting up about 4,500 contracts. So that ADV kind of falling back to earth as well, down to about 7,000 contracts a day. So ETHZilla, fun one to say, not the most liquid of names right now. The vol about a 127 out there. I just wanted to point out for all of you out there who are tracking ETHZilla, coming back to earth a wee bit out there. Speaking of coming back to earth, let's run through some of the rest of the altcoin universe, which has, as we mentioned at the top here of the segment, kind of come back to earth a wee bit. Solana falling way back to earth. It was north of the 166 level on the show last week, 166.86, right around 130 as we kicked off the show. So all of you who were lamenting maybe in the past to not having a chance to nibble south of 150 or even right around 125, well, you're getting your chance again, down over 36 handles, about 36 3/4 points from where it was this time last week, as Greg puts it, a sketchy neighborhood potentially out here in Solana land. XRP also giving up the ghost, was at about 2.5, 255 actually on the show last week, 214 right now. So still north of the 2 handle, which I guess is something for the bulls to cling to, but down 41 cents. Greg's beloved Doge was 17.9 cents last week, 15.3 this week, down a little over 2, about 2.5 cents. Litecoin 107.41 last week, 92.38 this week, so down about exactly 15 points on the week. Cardano 55 cents last week, 46 cents this week, so down about 9 cents. Polkadot 317 last week, 269 this week, so down nearly 50 cents. And Shiba Inu, 1,000,999 last week. This week, 1,000,000, 869. So unfortunately, no Shiba Lambos for anybody this week. But Greg, I want to get your thoughts on our question of the week right now. So to the crypto questions, we go.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, welcome to the Crypto Questions, where you folks ask questions. We also shine a spotlight back on you, which we are doing right now. This just went live right before the show, and the early results have certainly been interesting. Greg, we're asking our folks right now. We said it's been a wild year in crypto, precious metals, and equities. But we said there can be only one at the end of the day, only one winner. Gun to your head. If you had to go out right now and buy and hold through the end of next year, this is the caveat here. You can't just buy a call and just get rid of it whenever. You have to buy an at-the-money call and hold it through the end of next year. Which of these asset classes are you choosing? We gave you 3 choices and the infamous other. Bitcoin, gold, the S&P 500, or other. We've already had some write-ins for VIX, which is interesting. I don't know if I want to buy and hold VIX for over a year, but some folks clearly do. Mr. Greg, I have a feeling I know which of those assets you're choosing, but maybe you're going to surprise me. Which way are you going? Bitcoin, gold, or the S&P? Remember, you got to hold it through the end of next year. And then more importantly, which way do you think our audience is going?
Well, I would love to sell the VIX hold for the year because the path might be painful, but the terminal value is not going to be anything nice.
VIX is an asset you got to be able to get out with on a moment's notice. You can't buy and hold the VIX. Yeah,
that thing goes to zero. It's interesting because I do think risk assets, which includes crypto, has a lot of headwinds here. I think the clearest picture in terms of like preserving capital would be the precious metals. I think it would be gold.
Interesting. You think our audience is going that way as well?
Yeah, I think they are.
Let's find out, shall we? Right now, Greg, in the early voting, it's only been live for about an hour, so we'll see how this evolves over time. Bitcoin was running away with it, over 50%. It's still taking the number 1 spot, 41.7%, Greg. So right now, our audience leaning towards Bitcoin. What do you think? Interesting.
I mean, I get it. But we'll see. I think there's going to be better levels. There's going to be. I've been in crypto for a while, and I've seen some nasty pullbacks. And crypto can go down 80%. It's done it quite a few times.
I know you're wishing I put ETHZilla on this list, don't you? That's what you're mad about right now. Only room for 4, Greg. We didn't have room for your beloved ETHZilla. So 41.7% for Bitcoin right now. Gold, a clear number 2, Greg, exactly a third, 33.3%. Only 16.7% going for the S&P, so that's kind of interesting. And then 8.3% for other, including people who want to buy and hold VIX forever, apparently, Mr. Greg. So a lot of wild stuff out here. If folks want to check out the wild stuff you have cooking, Greg, and again, listeners, we really only have time to scratch the surface of all this stuff on the show here. If folks want to check it out for themselves, where should they go? What should they do, Mr. Greg?
Yeah, please visit pro.amberdata.io. You can check out all the charts. We include all the crypto-related equities, such as Circle, Coinbase, Strategy, iBit, all that good stuff, and the classic offshore exchanges, such as Darebit, Bybit, OKEX, both for futures, perps, and options. And if you want to read our weekly newsletter that gives us some insight around the crypto vol market, you can go to amberDataDerivatives.substack.com.
After this show, Greg, I'm going to run out and get a McRib. I blame you. You put me in the mood for it, listeners. So you too can experiment with your own Bitcoin McRib correlation, listeners. But you should begin your journey at Amberdata, then go to McDonald's and get the other side of it. Amberdata, the place to go to kick the tires and light the fire. That's going to do it for us on the Crypto Rundown today. Not going to do it for us on the network, though. Back again after the closing bell to break down all the day's worth of action. It's a wild one. S&P whipsawing all over the place today. That usually leads to a lot of volume. What was dominating the tape? Well, you got to tune into the Hot Options Report every day to find out. Back again with our usual array of content throughout the rest of the week until we're back again next Monday. Another episode with the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amberdata. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amberdata delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amberdata eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.